It is obviously concerning to see one of your stocks being down so much. Yes, I'm talking about FuboTV stock, ticker symbol FUBO. But why is it down? Hello everyone, welcome back to the channel. Today I will be talking about Fubo stock once again. I will explain why it is dropping that much and what I'm doing with my stocks. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out with the algorithm. Also, if you have any friend or family member that speaks or understands Spanish, I open a second channel in Spanish where I will be posting kind of the same content I post in here, but in Spanish, so it would mean the world to me if you share it and also subscribe to the new channel. But let's start with Fubo. So yes, even though Fubo is up over 6% in the last week, the stock is actually down over 57% in February, and obviously that is something investors don't like to see with one of their holdings. But we do have to take into consideration that the stock market has been kind of weird lately, as many growth and spec stocks are down by a lot while others are up massively. We can see stocks like Lemonade down over 40%, even Apple down over 11%, and Square was down over 25%. While we see how stocks like Facebook or Trulieve are on the green, and even the S&P 500 has not dropped and is on the green right now. So why is FuboTV stock down? Well, actually there are several reasons. First of all, we need to understand what happened with a fund called Archegos or Archegos Capital. Archegos Capital is a private wealth management advisory firm run by Bill Kwan. So Archegos had taken bets on stocks using borrowed money and pledged shares as collateral with the investment bank's brokers it had borrowed from. In such arrangements, when the value of the pledged shares falls, the brokers will ask the client, in this case Archegos Fund, for additional shares as a collateral. This is known as a margin call. This is something I have explained before in the channel. And then 2 weeks ago, Archegos was forced to unload $20 billion of shares following its inability to meet margin obligations, which means that they had a margin call on several stocks they were investing on with borrowed money. That led to prices of stocks like Viacom, CBS, Discovery crashing over 25% intraday, and US listed shares of China-based Baidu and Tencent Music plunging 33 to 48%. And guess which other stock they were holding? FuboTV, which led Archegos to selling a huge amount of their FuboTV stocks, increasing share supplies in the market and decreasing the stock price, and that is why the stock dropped over 32% during the last week of March. Second, we all have seen the deal between Dish and DraftKings, which obviously will directly compete with FuboTV and Victory. As many of you may know, Fubo acquired Victory, which is a sports betting app that directly competes with DraftKings, and Fubo was the only streaming service to provide sports streaming and sports betting at the same time. Now, there are a lot of differences between FuboTV and Dish. First of all, FuboTV is mainly focused on streaming sports, while Dish is another American television provider. We also have to take into consideration that Dish has been struggling a lot in the past years. As you can see, their revenue has been decreasing since 2016 and finally saw a huge jump in 2020 because of the pandemic. Plus, they have been losing paid subscribers year over year as well since 2016, and 2020 was no exception, while FuboTV has seen an increase in subscribers. As you can see, they ended 2020 with a little over 547,000 paid subscribers, up from 316,000 paid subscribers. Even though this might create kind of a competition between Dish and FuboTV, we need to understand that there is more than enough room for both companies in this industry. And while sports betting gets legalized even more, that market share will increase. It is smart. US regulators are becoming much more liberal with gambling, and the industry is growing as a result. Gabelli Funds, Adam Trevisan, and Gustavo Pifano estimate that country's sports sports betting market will be worth more than $10 billion by 2028 versus less than $1 billion in 2019 before the pandemic sparked strong demand from entertainment-stacked sports fans, which proves that even though DraftKings and Dish might create competitive space here with FuboTV and Victory, there is more than enough room for both companies to continue growing and expanding. Another reason why FuboTV stock has been dropping lately is because of a lawsuit against FuboTV. But I do have to say that this kind of lawsuits occur every time with different companies and should not affect the company that much nor the stock, but still, let's read what it says to understand why these firms are suing FuboTV. According to the complaint, the company made false and misleading statements to the market. FuboTV's growth in profitability and subscribers was unsustainable past the seasonal surge in subscribers levels. The company's product offerings suffered from undisclosed cost increases. The company could not successfully capitalize on its sports wagering opportunity or successfully act as a sports book. The company was not in a position to achieve long-term advertising revenue growth. Based on these facts, the company's public statements were false and materially misleading throughout the class period. When the market learned the truth about FuboTV, investors suffered damages. So they are basically talking about their annual report, FuboTV annual report, their 2020 earnings report, saying that the company was misleading, and that is what made people invest in FuboTV at the moment. But when investors found out the truth and the stock dropped, investors got affected. For example, they say that the company could not successfully capitalize on its sports wagering opportunity or successfully act as a sports book. And let me tell you something. This is something we definitely knew way before investing in this company. We knew that it was going to take time for them to start making money out of the sports betting acquisition. I have talked about this before in this channel. Sports betting is not legalized everywhere. This is not something that was not disclosed by the company. We already knew that they were going to be able to make money off that with time, but were not able to make money in 2020. Then they are talking about how the company was not in a position to achieve long-term advertising revenue growth, which does not make sense to me, because if you check their income statement for 2020, you will see that they did not have any revenue for advertising in 2019. So are they really thinking that there is not going to be advertising long-term revenue growth if they don't have anything to compare it with? It doesn't make sense at all, and that is why I think that these types of lawsuits should not affect the company nor their stock price in the long term. But I know that in the short term, retail investors see this type of news and might get scared really fast. Well, I think that this is just market manipulation. Lastly, last week we saw this. T-Mobile partners with Google, and that is bad news for FuboTV. Another scaring headline from the Motley Fool. Basically, what this article says is that T-Mobile partners with Google. Since T-Mobile will make Google messaging the default messaging service, will also use Google One Cloud Storage to back up and transfer mobile data, and in exchange, T-Mobile customers will get a discount for YouTube TV, a $10 discount. Both services until recently went for the same price of $64.99, but with YouTube TV now offering services for $54.99 to T-Mobile subscribers, it could lure away current or potential FuboTV subscribers. After all, T-Mobile has about 30% wireless market share today and could be poised to take even more in the 5G era. If you ask me, yes, this seems scary how they talk about this, but I don't think it will have a huge effect on FuboTV. It might in the short term, but not in the long term, as Fubo could also offer discounts, or people could just prefer Fubo than YouTube TV, since it is what they have been using until now. And even more if those subscribers are interested in sports betting, since YouTube TV will not be offering sports betting, and that is why I invested in Fubo TV.
While editing the video, I noticed that I didn't mention about what analysts were expecting, and I do have to say that they're expecting a huge uptrend from this stock. They're expecting this stock to go from what it is right now, $21.27 per share, to $30 per share as a low end and $60 per share as a high end. Also notice that almost every single analyst is recommending everyone to buy this stock, and none of them are recommending it to sell it.
After all that said, the worst thing in my opinion was the margin call from the Archegos Capital Fund, Still, I do continue liking the company long term. I am still holding my position in FuboTV, even though I'm down massively right now. But I continue selling cover calls in the meantime while it recovers. I do think that FuboTV is an excellent price right now and will be a nice investment in the long term for my portfolio. Are you holding your FuboTV shares yet? Are you buying more at these prices? Let me know in the comment section below. Remember about my second channel in Spanish? Thank you for watching this video. Hope you enjoyed the video. Please smash that like button and subscribe since it really helps the channel out with the algorithm and the growth. Thank you and see you next time.